Welcome everyone to Vested Interest. This is Shane back again for the Stock Pick of the Day video. It is December 2nd. That's right, we're in December, last month of 2024 here. This one will go quick. We've got Christmas and New Year's coming up. Hopefully you're ready for the holidays. We are going to take a look at one suggested by a viewer here. International Dividend said, would be interested in analysis on BP, Shell, BHP, and Vale. Cyclical industries, but always intriguing. And Vale is the one we are going to take a look at. Selfishly, this one is in my portfolio, so I have some selfish reasons for reviewing this. But thank you for the suggestion, International Dividend. Now, before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Hit that subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. Click the notification bell so you're notified whenever we put out any new content. I do the Stock Pick of the Day series Monday through Thursday whenever the market's open. Typically, there are times where I take a little bit of time off, so you have to forgive me for that. I don't work every day, and this is my side deal. I do not get paid for this. I do have a day job, but if you would like to help the channel and help me maybe quit my day job, there is the thanks button down below where you can buy me a cup of coffee. Go ahead and click that and donate to the channel if you'd like to do that. Completely understand to those of you who cannot. This is the Vested Interest Stock Screener. This is the criteria we are going to be going through today. We will cover at the end where it shakes out. It must meet 5 of 8 to make it onto my watch list. Now, you can use this screener, but it is just an initial screener. If it makes it onto my watch list, that does not mean I am buying. It means I am doing more of a deep dive into the company. And then I look at the financials, look at their balance sheet, their income statement. I'm looking at debt to equity ratios. I'm looking at their margins. Are they expanding? I'm looking at stuff like their price to book, their PEG ratios, their price to sales. I'm looking at their revenue. Is it growing over time? A lot of information in their balance sheet and income statement. And if you don't want to do that type of review, you shouldn't be buying individual stocks. You should stick to something that Warren Buffett would recommend, which would be the S&P 500. So an index fund or an ETF like VU or SPY or something else that tracks the S&P 500. Then you don't have to do any review. Just dump your money in on a weekly, monthly, quarterly, yearly basis, whatever your investing timeline is, and just dump money into it, set it and forget it, and don't worry about any type of review. All right, back to Vale. You can check them out on their homepage, vale.com. That's VALE.com. That is their homepage where I pulled this information from. And they are a mining company out of Brazil. So they are a foreign company. Their dividends will have some tax implications you want to be aware of. My brokerage accounts take out the taxes whenever the dividends are paid. If your brokerage account does not, you will be responsible for paying those taxes at the end of the year. You just want to make sure you understand which way your brokerage account covers that. So back to Vale. We are founded on June 1st, 1942 as Companhia Vale do Rio Doce. Over the years, we became just Vale and built a history. They're a mining company. We pioneered the world as a global mining company. We are present in more than 20 countries, sharing the passion for our business. We face challenges and we continue to learn every day. We have advanced ever since the first ore extracted in Itabira, Minas Gerais. Since then, we started to work in logistics through our railroads, ports, and terminals, in energy and in steelmaking. So not only do they mine the material, specifically around iron ore, nickel, copper. I think there's some other things they mine as well, but they transport that as well, again, through their railroads and ports, and they make their own steel that they sell as well. So they have their hands from the mining of the metal to the production and sale of the metal as well. Now, not only was this a suggestion, but they were down on the day, 0.71%. We are talking about Vale, ticker VALE, out of the material sector. Closed out the day at $9.79. Actually, looks like they're down a little bit more in the after hours, at least whenever I pull this data. 52-week range as low as $9.64, as high as $16.08. So they are right up against their 52-week low currently. They do have a market cap of $42.387 billion, a beta of 0.92, so they are just slightly less volatile than the overall market. PE ratio very low, $4.53 per share, but comparing this to other mining companies, that's really not extremely low. I mean, it is lower than they typically are, but not extremely low. EPS, earnings per share, sitting at $2.16 per share. Earnings date, February 20th of 2025. Can you believe it? We're already talking about 2025. Yeah, I know. It is what it is. Through February 24th, sometime in that little window there, they will report out their next earnings. Forward dividend is $1.78 paid out on the year. Now, they are a semi-annual payer here. Typically, they pay out about 2 dividends a year. Sometimes they do pay out 3. Sometimes in the past I've seen they've paid out 1. So annual to semi-annual payer here. Current dividend yield at 18.03%. So very high dividend yield on this one. Ex-dividend date was August 5th. They paid out in September on the 11th. 1-year target estimate, at least according to Yahoo Finance, where I pulled this information from. I am not affiliated with Yahoo Finance, just one of the sources I go to for information. 1-year target estimate of $13.97. So they see some upside as far as price appreciation from here, though they do not see it getting back to its 52-week high. Now we're going to take a look at dividend yield theory to see if this one is potentially undervalued. To do that, we look at their 5-year dividend yield average of 7.82%. We compare it to their current 18.03, or over here where it says forward 18.03, same number. Since it is higher and much higher than their 5-year average, that speaks to potential undervaluation, at least according to dividend yield theory. Now, their payout ratio, I like under 75%. They're currently sitting at 64.29%, so under the 75% that I look for there. Dropping down, we're going to take a look at free cash flow. I like growing free cash flow over time because typically if a company has growing free cash flow, they pay a growing dividend. They can also pay down debt, make acquisitions, reinvest back into the company, buy back shares, everything that a company does with free cash flow. Here you can see going back to 2021, $20.6 billion in free cash flow. 2022 was a drop down to $6 billion. 2023, a little bit up on $7.2 billion, and trailing 12 months looks like a drop to $5 billion here in 2024, but we're not through the rest of the year yet, so we may get better numbers, see how the rest of December shakes out here, and then we'll know the real effect of the year. And as you can see, this is a cyclical company, right? They have ups and downs, and they are going to be highly correlated to the price of precious metals, especially nickel, iron ore, and copper. So keep that in mind as well. Now, they do repurchase shares here, as you can see, going back to 2021. 5.5 billion in repurchase shares, 2022 up to 6 billion. So even though they dropped down in free cash flow there, they did increase their repurchase of shares, though with only a billion, 0.5 billion, it does not account for the total drop there, right? And they did decrease that in 2023 further. Looks like their free cash flow is up, but their repurchase of shares was down at 2.7 billion. And the trailing 12 months, they've further decreased that repurchase of shares down to 453 million. Jumping over to stockanalysis.com, this is another source I go to for information, not affiliated with this one either. They do have 8 analysts that have taken a look at this. The 8 analysts call it a hold, though it is close to a buy here. If you were to go to their webpage here, stockanalysis.com, you'd be able to click on each one of these, see how many might call it a strong sell, a hold, which is what they recommend, a buy, or a strong buy. Looks like some are calling it a strong buy, some are calling it a hold. I don't know that I saw any calling it a sale or a sell, but it is kind of leaning towards a buy, but not quite there according to these 8 analysts. They have a low estimate of $11.50, which would represent a 17.53% increase from where it currently sits. Average estimate of $15.06 would represent a 53.91% increase. And if it happened to hit their high of $18.50, that would represent a 89.06% increase in the stock price, and all the while you could collect that dividend. Now, jumping into statistics, I like to look at return on equity and return on invested capital to see how well the company is reinvesting its money back into itself. And ROE, return on equity, 23.33% is well above the 10% I'm looking for there. And return on invested capital at 14.69%, again, above the 10% I'm looking for there. So good numbers overall. EPS growth was not listed. I like 5% or better over the next 5 years. Again, NA just not listed. Revenue growth was listed in the negative 32.65%. I'd like to see that improve, but again, they are highly correlated to the price of precious metals, as all mining companies are. Now, I do have a position in Vale. As I mentioned in the beginning, I do hold a position here, 614.91639 shares currently. My cost basis is $12.16 per share. I am down slightly at 19.52%. Not slightly, I'm down significantly at 19.52%. This is one that I will be nibbling on and continue. I have been for the last several months. Anytime it's below my cost basis, I don't mind adding, 3, 4, 5, even 10 shares, $100 here, $100 there to this one, and we'll continue to do so to try to bring down my cost basis. I'd like to get it down into the $11 range, even into the $10 range. And currently having 7,400, I wouldn't mind, getting this to about 10,000 invested into Vale over the next, 6 months if it stays down. Again, cyclical company. You want to be buying whenever it's on the down cycle, holding or selling whenever it shoots up. Again, semi-annual payer, payout ratio 67.23, so a little bit higher here from stockanalysis.com. Yahoo Finance had them at 64. Either way, still under the 75% I'm looking for. Dividend growth, they're saying 70.47%. Now, that's not going to be typical, right? You go over the course of a year here, you can see they are up 55, 90 something cents compared to the 86 cents they paid in 2023. Actually, they paid out more. They paid out 3 times in 2023. So unless they pay out again, it's looking like they're back to the 2 payouts, 3 times in 2022, 3 times in 2021. So 2024 is one of those years that they only paid out a couple times. Going back here to March 5th, 2021, you can see here 76 cents per share. 2021 June was 43 cents. September 2023 or 23rd, 2021 at $1.55. March 2022, 71. So they're all over. They're going to be, again, based on the price of metal, specifically iron ore, nickel, copper, 0.05. That's one of their lowest payments. You can see here back in December 2022, 5 cents and some fractions of a penny. March 2023 was back to 35 cents. August 2023 was 40 cents. November 2023, 46 cents. March 2024, 55 cents. August 2024, 37 cents. So even though they're saying dividend growth, actually their last dividend was down from the one in March, and you need to look at the overall year compared to previous. So I don't know. I'd take that with a grain of salt. That doesn't seem like the math shakes out right. Buyback yield is positive at 3.14%, and shareholder yield very positive at 17.39%. That's what you want to see here. I want to see positive numbers for both buyback yield and shareholder yield. All right, let's check out the screener here, see where it stacks up. Understand the business, check, that's where we started. They're a mining company, right, primarily, and a logistics company as well. Growing free cash flow, nope, they're up and down, and they're a cyclical company, so that makes sense. Growing dividend, yes, they say they do. I actually wouldn't be opposed if you said no. Comparing the payout this year to 2023, they're actually down a little bit. So if you didn't put a check there, I wouldn't argue with you. Dividend payout ratio is under 75%. They're in the 60% range, mid 60s, 64 to 67, call it 65, split the difference. Check valuation based on dividend yield theory. Dividend yield theory says they're potentially undervalued now. Check. Buy below current cost basis. It is within 15% of a 52-week low, so check there. Return on invested capital, return on equity, both over 10%, so check there. Earnings per share growth was not listed, nothing. We didn't look at price to book because it's not a bank or a financial company. So what do we got here? 1, 2, 3, 4, 5, 6. It does make it onto my watch list again. Obviously, it's in my portfolio, and I am adding. Let me know what you think of Vale in the comment section down below. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button. Join us on this journey to financial freedom. Join the vested interest community. Excuse me. And drop a comment down below. Let me know what you think of Vale. Let me know what you think of the videos, or ask any other questions, or make a suggestion if you have a company you'd like me to cover in the stock pick of the day video series here. And thank you for the suggestion, international dividend investor there. I do appreciate it. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.